Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Fiem Industries, which looks like a very good pick from medium term point of view. And here I explain about the company. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Fame Industries, here's a small request that kindly support me on Patreon, and once you do that, help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. Now about the company. Established in 1989, Fem Industries are into auto components manufacturing, and they have expertise in making auto lighting. So it's in the lighting division and boast of marquee clients and spread across India and some other countries abroad as well. They also produce rear view mirrors and canisters. Clients include Suzuki, Honda, Yamaha, Bajaj, and LML, etc. In terms of numbers, these were March numbers. So market cap of the company is around 2000 crores. Sales went up by nearly 20% to around 490 crores. Profit also jumped smartly to around 34 crores. So that's over 20% growth. It is trading at one time sales. It just moved up slightly from there, but trading at only one time sales, which looks very attractive. High combined promoter and institutional holding with a 13% free float is there. In terms of performance, stock has fallen relentlessly since January of 2018. So you have to agree with me that the auto industry and especially the auto ancillary space has been hit brutally with the GST thing in 2016, demonetization and many other factors. And from 2018 till now, in 4.5 years, many of the companies have not performed at all, and their returns have not been that great. So this one had fallen around 75% from 2018 highs, and now is trying to recover. And the major fall of these took place during 2020 March fall, but it has recovered smartly from those lows of around 400 430 levels. It has been up more than 3x. So when I made the presentation, it was around 1300. Now it is around 1500. It has done exceptionally well over the last 1 or 2 months, and now results are beginning to show promise. And I believe going forward also return ratios will only improve as things with chips shortages for auto industry will reduce, and there are other issues with raw material prices of metal like steel, etc., that had gone up sharply over the last 3 4 months post the Ukraine crisis. Now that has also stemmed a bit and is receding, and with the high interest cost, although it will be a burden for people to buy into autos, but overall it is doing its bit because the metal prices have come down sharply after interest rates were hiked globally. So why I believe it is a 2 year pick. Auto industry is coming off a 4 5 year hiatus. So I believe that this is going to be a good 2 3 year run for the automobile industry, beginning from second half of this year and especially in 2023. Commercial vehicle segment was the most hit and is bouncing back, and most of their clients are in the commercial vehicle division as well. For FAM, again, raw material cost, as I explained, steel prices are down and many other costs are now coming down, especially now with the Brent crude around $106 per barrel from 140. It has come down sharply, 135 138 it was just about 2 months back. So this will only help auto companies. I think the chip shortage issue, although it is still there, but things are much better than what it was in February of this year, Jan Feb. So over the last 6 months, things have resolved in this factor as well, and it has led to sector coming back into favor, coming back into fashion, and we are seeing many auto companies now performing well compared to the market. Technically, it is also breaking out smartly above 1500. We'll discuss about the technicals in the next slide. So in terms of technicals, major long-term support is around 1130, 1150 levels. So one can just buy here and on dips till 1300 with the stop loss to 1130. The short-term support is around 1300. I think it might just revisit 1300 once for a few days and then recover again. The strongest up move is expected at this point of time from 1500 levels. If it can sustain 1500, 1530 over the next few days, say by next week, I think we could be headed towards 1850, 1900 very quickly. It may continue to surge because of the kind of selling it has seen over the last 4 years. It looks extremely strong on chart, may consolidate for a few days, but the uptrend may just continue at least for the next 6 months from these levels. So my call on the stock is hold if you have the stock. If you don't have, you can buy some here and buy more around 1400, 1380. Expect a 50 to 70% upside at least in the next 2 years. So I believe the stock can easily head towards a 2500, 2600 over the next couple of years. I don't think there will be immediate movement, although the stock is in an uptrend. There could be a 5-10% up move possible, but if you can hold 2 years, this can give you very smart returns. The sector is on a cusp of a strong recovery. I think for the next 2.5 years, autos should end up doing well. So this was my video on Fiem Industries. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.